Hello, I'm Lisa Pennington and I'm a director here at MHA, and today I'm going to be discussing with you the basis period reforms that are going to be introduced from 24-25 with a transition year in 23-24. So these are proposed reforms to the current basis period that have been introduced by HMRC, and they are going to affect any unincorporated businesses, partnerships or sole traders or LLPs that do not currently have a 5th of April as their accounting year end date. So current continuing businesses, so if you're an established business and you have a non-March year end, so you could be preparing accounts to a June year end or a September year end, or the example that I'm going to use is a December year end. You currently are being taxed on, say, 31st of December year end in the tax year that lands. So say you're looking at a 31st of December 22 as your accounts year end. You've got your accounts period begins on the 1st of January 22, ends on the 31st of December 22, and that forms the basis of your taxable profits for the 22-23 tax year, and that will be due to be paid. The tax on that will be due in 31st of January 2024. Now, that's for current established businesses. If you are joining a partnership that is a December year end, there's going to be a slight difference. So say you join a partnership that again has a December year end, and let's say you joined on the 1st of January 21. Your first year, for tax purposes, you'll be taken to the 5th of April, the first 5th of April that you hit. So you'll be taken to the 5th of April 2021, and that will be your 2021 tax return. Now, your second year will be based on your first 12 months of profit, and that will take you from the 1st of January 21 to the 31st of December 21, and that will be taxed in the 21-22 tax year. So obviously you can see that there's been a period that you've actually been taxed on twice. So that's from the 1st of January to the 5th of April 21. And that creates what's called taxable overlap profits. And these are usually, when you leave the partnership, then they are released and you end up getting the relief on those. So obviously there's a complexity here. Now, to make tax more simple, there is being introduced, as I say, these basis period reforms. So the proposed new reforms are that from 24-25, all unincorporated businesses are going to be taxed on the profits generated between the start and the end of the tax year. So that's from the 6th of April to the 5th of April. So that will apply regardless of what your year end is. So as I've said before, using the example of the 31st of December as your accounts year end, you are going to be taxed on those profits to the 31st of December, but you are going to be taxed as if they fall in the tax year. So you're going to now have to apportion those profits between two periods. So the transition year, which is 23-24, I've got a slide here that will explain that. So this is a key year because this is where we're going to introduce these basis period reforms. So using that 31st December as our accounting year example, you're going to be taxed in the 23-24 tax year on the accounts to December 23, but you're going to have to add an extra period up to the 5th of April 24, and then any overlap profits can be deducted that were that came into play when you first joined the partnership. So there could potentially be a difference in those extra profits for those 3 months compared to the original overlaps, and what's been allowed, HMRC says that we are able to spread those profits over a 5-year period to ensure that your cash flow and your tax liability is not unfairly affected. Now, if you retire within that 5 years or leave the practice, those transition profits, they are going to have to be taxed in full at that point. For GP practices and GPs, when you prepare your Type 1 annual certificates of pensionable profits, this follows the tax. So if you're on a 31st of December year end, you are being pensioned on that year end as well. But going forward, we are not yet aware of how this is going to be affected in the transition year, because we've not had that full clarification yet, which we are still waiting from the Department of Health. We are obviously going to be preparing your 23-24 estimates of pensionable pay soon, so we are going to have an understanding of how this is going to be calculated, and we are waiting for clarification on that. So in conclusion, we would recommend that you as individuals, that you consider the impact on you as individuals for your personal tax liabilities and also practices. So if you've got a non-5th of April or 31st of March year end, to consider the impact that this is going to have on you from 24-25, and whether or not you're going to change your year-end accounts year-end date to coincide with the new rules and change it to a 5th of April. And we at MHA are happy to discuss this with you and would recommend that you get in touch with one of my MHA colleagues or myself to discuss this further. Thanks very much for listening.